Stocks open firm but drift lower ahead of the start of the earnings season. Realty and utilities lead gains while financials and FMCG drift lower.
City gas distributors lower prices after the cabinet accepts most recommendations of the Kirit Parikh panel on gas pricing. The policy bodes well for players like GAIL, Indraprastha Gas and Mahanagar Gas.
Tata Motors gains after JLR reports strong sales growth in Q4 along with a healthy order book and expectations of closing the year with strong positive cash flows. Analysts too turn bullish on the stock.
Strong bookings and collections in fourth quarter drive up Godrej Properties and Sobha. Other realty stocks too gain as fears of higher interest rates recede after RBI's pause.
Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Mangalam Malu as well as Sonia Shenoy. Well, it is turning out to be a session where it is absolutely steady for the markets. In fact, the Nifty is above its 50 as well as 200-day moving average. So no real complaints which are coming in for the markets at this point in time. The momentum seems to have continued into this week as well. We've closed 2 weeks with gains and the RBI did halt on rates last week. So that has really helped in terms of momentum. And the general view is that the Fed is probably ending its rate hike cycle, maybe another 25 basis points and then possibly a prolonged pause. As of now, we have a lot of cues to watch out for earnings this week. So we do have the likes of TCS, Infosys as well as HDFC Bank reporting numbers.
And there's nothing to not like about the market, right? I mean, it's well in the green. We have a long weekend coming up. The bulls are in charge. The FIs have been buying for 6 straight days. So I guess everything is going smooth. Of course, things could get derailed with what TCS and Infosys have to say, because it's going to be the first time we hear about the FY24 guidance from a company like Infosys could be. And Jefferies put out a note where they're expecting quite a paltry guidance from the company this time because of the uncertainties. But I guess that's something that the street already knows about, so it doesn't come across as a surprise. But up until now, things are looking good.
Things are looking good, and what I like the most is the smooth handover that has gone on from the Bank Nifty to the Nifty IT index. In fact, the Nifty is now zoomed to the high point of trade, closing in on that 17,700 mark after conquering 17,600 today. And this afternoon itself, we've seen a big recovery from the lows on the Nifty Bank, which was an underperformer. So now the Nifty Bank is sitting with a cut of just about 22 odd points. But in the meanwhile, the IT index has powered ahead. The IT index has moved to the high point of trade, led both by Infosys and TCS. Both Ekta and Sonia were talking about their numbers later. The question is how much of the bad news is priced in, and is the street willing to take a fresh look at these stocks? Probably because the street believes that maybe the worst of rate hikes is behind the companies and the sector itself, behind the economy itself. So we'll watch out for how that pans out. But meanwhile, we have the gas stocks. They're in focus. The government has accepted most suggestions of the Kirit Parikh panel committee. Sonal joins in with all the details of this development. Sonal.
Well, yes, this has come as a material relief to the gas users as the government has accepted Kirit Parikh committee recommendations and has amended as to why gas is and how gas is priced in the country. So let's understand some basics first. India consumes around 150 to 160 MMSCMD of gas totally, out of which 50% or 80 MMSCMD is produced in the country and rest is imported. Out of this, 77 to 78% is the gas under APM or administered price mechanism, and rest is non-APM. Out of the total production, 83% is produced by ONGC and Oil India combined, and rest is basically private players or JVs. So the change that has come about is in the APM gas pricing. Let's first talk about what was the gas pricing scenario earlier. APM gas prices, they were basically decided on basis of a formula, which is the weighted average price of 4 global benchmarks, that is US Henry Hub, Canada-based Alberta gas, the UK-based NBP and Russian gas. It was revised every 6 months and it was set at $8.57 per MMBTU as per the last revision. Now there has been a change to that. Gas prices will now be announced every 1 month. The prices will be pegged at 10% of international price of Indian crude basket. And to protect the interest of consumers, there is a ceiling to this. The gas prices, that is $6.50 per MMBTU, and the floor is at $4 per MMBTU, which is for the benefit of producers. Now it's important to note that ceiling will be maintained for FY24 and FY25, post which this will see an addition of $0.25 per MMBTU every year. Gas from non-nomination blocks of oil and ONGC will have 20% premium to APM prices, and there is no change in pricing regime for difficult fields or any LP blocks. Now, this change was brought about because of the way gas prices moved during the Russia-Ukraine war, as the global supply of gas was impacted. This led to prices in Europe going up by 3 times, prices in the US touching new highs of $9 per MMBTU. This led to higher prices in India as well. And that is the reason why CNG prices in our own country and city shot up by 80%. So that is the kind of move that we saw in 2022 as well. Now let's move on. After talking about how CNG and PNG prices went up, that was the reason why the government went ahead and set up the Kirit Parikh committee. But with the new pricing regime change that has come in from here, we will see that the prices have been set at $9.16, that is April 1st to 7th. Post that it is at $7.92 per MMBTU. But again, the ceiling is at $6.50 per MMBTU. This has come in as a big relief to city gas distribution companies. IGL gets around 80% volumes from CNG and PNG segment, MGL at 87%, and Gujarat Gas at 36%. So the first two tend to benefit the most. As a result of all this, there have been massive price cuts by all the players. MGL has cut CNG prices by 8 rupees, PNG by 5 rupees. We have seen Adani Total Gas cutting CNG prices by 8 rupees, PNG prices by 5 rupees. There's IGL which has cut prices by 6 rupees. GAIL Gas has cut prices by 6 to 7 rupees per kg, and this has come as a relief to consumers as well. But for producers like ONGC and Oil India, in the near term, there will be a hit to their realizations, with both of them seeing cuts of around 24% as per brokerages. But of course, in the longer term, it's a positive because of the floor. Brokerages are positive on the entire city gas distribution space. Jefferies has upgraded the EBITDA estimates by 6 to 20% for all the 3 companies. For GAIL, it will lead to a savings of 1100 crore rupees for LPG segment due to lower gas costs. Morgan Stanley says that not only city gas distribution companies, new pricing mechanism is a positive for producers as well and removes a multi-decade overhang on long-term returns. And CLSA says despite the price cuts, margins will be positive for MGL and IGL, and this takes discount of CNG versus diesel back to 30% and brings back the pricing power. Government's intent to assure $75 to $80 barrel realization also raises earnings predictability for ONGC and Oil India.
Okay, thanks a lot for that. And a fall in CNG prices definitely positive for names like Maruti. But let's listen in to what Kirit Parikh had to say post the recommendations getting accepted.
The APM prices recommendations that we had made were following that it should be fixed within a floor and a ceiling price, and that is accepted by the government. The same floor and ceiling we had suggested, $4 per million BTU and $6.5 per million BTU. I think the consumers will are getting cheaper price for the PNG and CNG supplies. Second measure the government has taken is that it has provided 20% additional money or price increase for gas that is produced by ONGC and OIL.
Okay, so that's the update coming in on the big story there. We need to take a short break, but up next we'll be touching base with Ajmera Realty. The stock is buzzing in today's trading session on the back of its Q4 update. So more details on the other side. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Markets looking extremely good, but what's looking better over the last couple of trading sessions has been the realty sector. A bunch of reasons for that. One, the RBI, pausing their interest rate hike maybe could be looked at as a positive for the real estate sector. And to add to that, we're getting some good fourth quarter updates as well from the likes of Sobha, Godrej Properties, and now as we speak, Ajmera Realty as well. For Ajmera Realty, the fourth quarter sales value was up 16% year-on-year and 10% quarter-on-quarter. We have Dhaval Ajmera, who's the director of the company, joining in now. Thanks a lot, Dhaval, for joining in. FY23, we're looking at your sales value at around 834 odd crores, which is a near doubling of the numbers as compared to the previous year. What's your outlook on FY24 with regards to quarterly run rates? What's a sustainable number? You have a lot of launches planned as well.
Yeah, hi. I think the coming quarter, this year had been, one of our best sales numbers we could say we have clocked in. And as a company, we continue to make this momentum, in the coming years as well. So coming quarters for the next year, we continue to see a sustainable growth from where we are to at least 20-30% from where we are today. So definitely we are looking at a growth path with a couple of launches which has been already planned to about 1 odd million square feet, which is about totaling to top line about 2,000 crores. So this is where we are looking in the next year as well.
So this 2,000 crores you said is for what? For the full year?
Sorry?
This 2,000 crores figure you gave us is for the full year,
Yeah, that's
is it?
the top line of the few projects which we are going to launch in the coming year, which will be completed over the 2 to 3 years time.
Okay, no, my question was more for the full year of FY24. What is the expectation? I think in FY23 you're sitting on a base of around 830 crores or so. What's the expectation for FY24?
So that's what I said, that over the next entire year, we are looking at a steady growth in quarter to quarter with on an average, I would say 20 to 30% hike is what we are targeting from where we are today.
Okay. Dhaval, how much cash did you all generate in FY23?
So we had a healthy collection, and if I have to look at the numbers, we were about up 35% from 394 crores versus 532 crores. So that was our collection over the last entire year.
Okay, and what are you aiming for in FY24? Because you have indicated that you will look at a strong cash generation, which will also help in terms of debt deleveraging. So give us a sense in terms of what you're anticipating in terms of cash collection in FY24. Where do debt levels stand currently, and how much would you want to reduce it by?
So our debts are divided into two parts. One is a group level debt, that is a corporate debt, and second is project level debts. While project level debts will be taken care from the project itself, so within the life cycle of the project that will get completed, whereas the group level debt is what we are targeting, which is in the range of about 500 crores, which we want to cut down and bring it over to the next 3 years' time. We will reduce it to almost zero. And in terms of our collection, which is going to happen over the next entire year, our target is to see around about 750 to 800 odd crores.
Right. Just a couple of questions before we let you go, Dhaval. First is, what is the unsold inventory that you're sitting on currently? Secondly, what kind of realizations are you aiming for? What kind of demand are you witnessing? Because the fourth quarter obviously saw higher luxury sales because of that tax benefit angle as well, which goes away from this fiscal. So, where are you seeing more demand? Is it luxury? Is it ultra luxury? Are you seeing some sort of problems in the entry level segment? And secondly, is the unsold inventory that you're sitting on?
Our unsold inventory, which is ready, is almost as negligible as zero, to be honest. So wherever there is a ready inventory, it's almost sold, maybe 1 to 5 lakhs here and there. As far as so we have under construction projects where we are, it is the sales which are happening on those projects. But if it is ready, it is getting sold. Primarily, also our feeling is we have a mid-luxury project. So like our Manhattan project in Vadala, which is like a mid-luxury project, where we are seeing good steady demand over the entire year. So if I have to look at the sales happening in Manhattan, which has been a steady rise from where we've started, we launched somewhere in the month of April, and we've sold around 40% of the entire inventory where we have to sell. So that's overall, that's where we see. So overall, when we have an under construction stock where, which is steadily and constantly selling, but if it is ready, it is selling quickly.
You had plans to get a strategic investor on board as well, right? Or a PE investor in the Vadala project. Has that seen any fruition?
No, we are in talks, but we haven't yet closed them.
Okay, and anything in this calendar year itself?
Planning to do that in the coming this calendar year itself.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. Appreciate your thoughts. That's Ajmera Realty, up 5.5% right now on the back of its numbers. Let's do one thing. Let's slip into a quick break. On the other side of the break, we'll speak with SkyMet. They put out a statement saying that India is likely to get below normal monsoons in 2023, and there are other factors besides El Nino that could hit the monsoon. So we have Mahesh Palawat of SkyMet Weather Services that will be joining in just a bit to talk more about that. Welcome back to Halftime Report. Now, we're tracking the monsoons because there's an expectation of a weak monsoon this time around. And SkyMet put out a note where they said that India is likely to get below normal monsoon rains in 2023. And besides El Nino, there are other factors that could hit the monsoons this time around as well. So let's find out more. Mahesh Palawat, the Vice President at SkyMet Weather Services, joins us now. Mr. Palawat, tell us a little bit about what are the other factors apart from El Nino that could hit the monsoons this time? And geography-wise, where are you seeing the weakness emerge?
See, this time we expect that monsoon will be 94% of long period average, that is 8.6 mm. And El Nino will be evolving and it will be much stronger in second half of monsoon. Apart from El Nino, we expect that Indian Ocean dipole, which is another deciding factor of monsoon, southward monsoon, it is not very positive. As of now, the indications are there that it will be in the positive side of threshold value. But if it become positive beyond 2 degrees or so, then it can negate the impact of El Nino. But as of now, it doesn't seem to be. And that's why we expect that the monsoon will be below normal at 94%. And June will be, we can say, around 99% of LPA. And as we progress further during monsoon, the August and September will have the impact of El Nino in greater way.
Okay. So, sir, I just wanted to get a sense that last year there were a lot of areas or regions which saw a deficit, but it was made up towards the end of the monsoon between the months of August and September. So you're saying that because of El Nino, that possibility is not going to take place this time?
Yes, last year we have seen that western parts of Rajasthan was rain deficient, and most parts of Indo-Gangetic plain, right from Punjab, Uttar Pradesh, Bihar, Jharkhand, West Bengal, all these areas were rain deficient until July. And from August, they received very good rain and the deficit was eradicated. But now this year, as we progress further in the month of August and September, monsoon is going to deplete, or you can say monsoon rain will be much weaker. That's why we have come out with a forecast of for August, it will be 92% of LPA. It means 8% deficit, and September, as the monsoon will start withdrawing in the month of September itself, and monsoon rains are not very high in the month of September, but still it seems to be 10% deficient. We have predicted 90% rain for of LPA during month of September. So the overall month,
Yeah, so basically what you're saying is overall monsoons will be 94% of the long period average, August will be 92%, and September will be 90%, right?
90%, yeah. And July will be 95%, and June will be 99%. July is the rainiest month, and July and August are the rainiest month during monsoon. But July seems much better, but August and September, the rainfall will deplete.
Do you have any data on how do you expect the spread of the monsoon to be? Because apart from the volume, the spread is another important factor to track what the impact of it could on agriculture and rural demand be.
Yes, it seems that South Peninsula will get good rain, and Northeast India, particularly Assam, Meghalaya and Arunachal Pradesh, these areas will be also benefited. But the central part of the country, particularly Gujarat, West Rajasthan, North India, Karnataka, Vidarbha, Marathwada and western parts of Madhya Pradesh, they will remain rain deficient. But sometimes it happened that during last 4 to 5 years, we have seen that low pressure areas or depression which usually develop over Bay of Bengal, they take a westerly route across Odisha, Telangana, Vidarbha, South MP and reaching up to Gujarat and Rajasthan. So despite below normal rainfall over these areas, occasional spurt of rains for say 24 to 48 hours spell of rain will be there over central parts of the country. But overall, monsoon will be below normal, particularly these areas, central India will get impacted more in comparison to other areas.
Okay.
Yeah.
Sir, have you done a probability of the LPA or the long period average coming below 94% as a whole and maybe even exceeding 94%? And what is the probability of both those events and what would it be based on?
As we are now in ENSO neutral condition, earlier it was La Nina, triple dip La Nina. Since last 3 years, we have seen good monsoon, and due to La Nina conditions, now it is ENSO neutral, and this will be evolving El Nino. So gradual increase in sea surface temperature over Eastern Pacific will be observed, and it will be more stronger in the month of August and September. And it will continue up to October and November. We have come out with the 94% of long period average, and as we progress further, the monsoon rains will start depleting due to increase in intensity of El Nino, and the geographical distribution will be skewed, and central parts will be you can say will be below normal. However, northwest India, particularly hills and parts of Punjab, Uttarakhand, and Indo-Gangetic plains, parts of northeast India and South Peninsula will be much better.
When do you come up with your next update, sir?
Usually in the month of July, but last year we have not done any revision, and this year also it seems that we will stick to this forecast. But if it arises, it will be in the month of July.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's SkyMet. The initial idea is that the monsoon is going to be below normal. It'll probably be at 94% LPA. June will be 99%, July 95%, but August and September is expected to probably be weaker according to SkyMet. So that is something that we will be watching out for. Time for a break now, but up next, a technical check. Jay Thakkar will be joining in. Stay tuned.
Welcome back at the high point of trade. So good time to get in an F&O perspective on the markets at this hour at midday. Well, today has been the tale of two halves. So as far as the Nifty is concerned, we moved to the high point of trade. There has been a strong recovery from the Nifty Bank as well, but the Nifty Bank is underperforming. As you can see, the Nifty up almost 0.5%, whereas the Nifty Bank supporting the Nifty is the IT index, which has supported the Nifty all through, and some recovery from the Nifty Bank as well. The Nifty Bank crucial support zone, however, is the 50-day moving average, 40,650. The low on the Nifty Bank 40,800 mark, so bouncing off important support zones. The Nifty is above both the 50 and the 200-day moving averages, and both the 50 and the 200-day moving averages are placed between 17,500 and 17,550, so that is an important support to work with as well, and that's what given a lot of put writers a lot of confidence to go ahead and write the 17,600 put. As we speak, almost a crore shares written in open interest for a premium of 40 rupees, telling you that 17,550 would be a strong support for the markets. Just about 15 to 20 minutes ago, we saw a continuous amount of writing at the 17,600 call as well, but those call writers have now lessened their positions. Now only 65 lakh shares remaining in open interest as against a little over a crore some time ago, and that's because the markets moved higher and moved closer towards that 17,700 mark. If you just take a look at the premium on the 17,600 call, it's closer to 120 odd rupees, telling you that those who are still in the 17,600 call are hoping for some resistance above that 17,700 mark. If that does not come by, the market can move even further higher because these call writers will have to cover their position. So 17,550 strong support. Let's see whether 17,700 is taken out or not.
Okay, inching closer towards 17,700 currently for the Nifty. Thanks, Manglam, for that. Jay Thakkar joins in to tell us what he's strategizing technically. Jay, hi, welcome to the show. So just wanted your thoughts. 17,700 is a stone's throw for the Nifty. Once we do conquer that, what is your sense in terms of how we could move technically, and what would you strategize and recommend?
Hi, very good afternoon to you. Well, I would say that yes, Nifty is sustaining well above 17,600 levels for today, and that was very crucial level from an intraday perspective. And we have seen good additions on the put side out there, as Mangalam rightly pointed out. And now on the upside, what I see is that Nifty is heading towards 17,800, 850 in the short term, and above those levels, we can see the levels of almost 18,000 to 18,100 as well. So this rally is likely to continue further as well. I mean, if at all there is a dip, that too should utilize as a buying opportunity. Now, in the last series, if you see in March, earlier there was a range of 16,800 to 17,000. Then the range got shifted higher on the upside from 17 to 17,200. Thereafter, the range has shifted now to 17,200 to 400. So, on the medium-term perspective or a positional perspective, I would say that 17,400 to 200 range is now a very crucial range. Until those levels are held, the overall short-term bias will be positive. The extended target now on the upside comes to 17,850 to 18,000, 18,100 on the Nifty. Now, as far as Bank Nifty is concerned, I would say that yes, it is under pressure today relatively to Nifty. I would say that initially Bank Nifty had seen a good recovery, and now Nifty is seeing that. But at above 41,000, 41,200 range, I would say Bank Nifty again would come into a bullish zone. Right now it is into a consolidation zone. So above 41,200, it will then inch towards the levels of 42,000, which is its previous range high. So Bank Nifty is also positive. I think any dip out there should also be used as a buying opportunity. I have two buy recommendations for today. The first buy recommendation out there is on Infosys. Definitely, IT is supporting well, and Infosys is likely to retrace its previous fall until the levels of 1462 to 1492. These are its two short-term targets, 1462 and 1492. One can buy this, placing a stop loss at 1412. And second buy recommendation is on M&M. Now, Mahindra & Mahindra has provided a very nice technical breakout above the levels of 1170, 1175 from an inverse head and shoulders pattern, and it has provided a positive close on the weekly charts after 7 consecutive negative close. So one can buy Mahindra & Mahindra for a target of 1220 and 1245, and one can place a stop loss at 1162.
All right, Jay, thank you so much for joining in and giving us your views on individual stocks as well as the indices. With that, we'll step into a short break. On the other side, we'll get Ekta to move to the big wall. She will focus on the largest deals in the healthcare space. Stay tuned. Welcome back. Singapore government-owned fund Temasek Holdings has acquired majority stake in India's leading hospital chain, Manipal Hospitals. Ekta's moved to the big wall to decode this deal and how hospital companies' valuations have actually zoomed in the last 5 years. Ekta.
Thanks for that. Well, in what is one of the largest deals which have taken place in a pan-India operator, Singapore-based PE fund Temasek is buying controlling stake in India's second-largest hospital chain, Manipal Hospitals, for over $2 billion. Temasek, remember, already owns 18% stake in the hospital and will be buying an additional 41% from promoters and others for around 16,400 crores. Manipal, with 8,300 beds, a hospital chain with 29 hospitals in 16 cities, is India's second largest pan-India player after Apollo Hospitals. The company, which is looking to ramp up its bed count to around 10,500 in 2 years, has seen revenues more than doubling year on year to around 4,000 odd crores and margins expanding to around 24% in FY22, valuing the deal at around 10 times FY22 sales. Talking about valuations, in the past 5 years, valuations have risen as much as 8x in the Indian hospital space. 2018, for example, saw two pan-Indian hospital companies sell stake, Fortis as well as Max Health. Fortis, interestingly, which was once bid for by Manipal and sold to IHH, another non-Indian promoter, for a valuation of around 13,000 odd crores, currently has a market cap which is almost 50% higher. In the same year, KKR picked up majority stake in Max Health for a valuation of just around 4,265 odd crores. The current market cap is at over 42,000 crores. KKR also exited Max with a 5x gain last year. Valuations for Indian hospital, experts say, really pivoted during COVID-19, which benefited from better improved long structural drivers such as better medical awareness, insurance penetration post the pandemic, and medical tourism reverting back to normal levels. And Manipal's valuations doubling just in the past 2 years is a good indication of this interest. In 2021, National Investment Infra Fund or NIIF invested around 2,100 crores for 8 to 9%, valuing the company at around 25 to 26,000 crores, which is now almost doubled to around 40,000 odd crores. And this is reflected in hospital stocks too, which have risen anywhere between 25 to close to 100% for some since the start of FY22. Lastly, this deal also points to a trend of PE funds doing control deals in the Indian healthcare space. Besides KKR, Max, other recent examples include Ontario Teachers Fund and Sterling Hospitals and Upward PE and the Samara Marengo platform as well.
All right, Ekta, thanks a lot for that. In fact, to discuss this further, we have with us Cinderella Carvalho, who's from JM Financial, joining us now. Cinderella, what do you think are the drivers of the valuation zoom that we've seen in the last 5 years, apart from, of course, all of us realizing how broken our healthcare structure is during the pandemic? But more importantly, going forward, do you think these will sustain and give the same sort of returns going forward?
Yeah, so from the valuation perspective, the Indian healthcare sector is yet highly underserviced, right? So we will need a lot of investment going into the sector to boost it further and service the entire Indian population. We still need a lot of investment to come in to, talk about valuations. I think the valuation surge has been well supported by the volume growth also in the sector, and the volume growth of other listed hospitals, if you see, have been steadily stronger post-pandemic as well. So I think these are major indicators that our entire Indian population's healthcare needs need to be serviced at a larger and wider scale. And that's where I think these valuations are indicating that how much of growth is visible in this market. And given that there is still a lot of population and segment underserviced, these valuations will only look upwards, given that we are looking at one of the closest to the largest player, and the valuation of this deal also appears to be closer to the Max and Apollo's valuation at this point in time, is what our sense is. So it is the need of the hour and the ability and the kind of space that we have in the entire healthcare system, which needs the growth to come in the entire sector to drive the overall valuations and the service part of the sector, which will go up with the valuation part.
Okay, Cinderella, hi, welcome to the show. Well, what does this mean in terms of further consolidation within the entire hospital space? The key question is that are the likes of Apollo and the others up for sale, or potential interest is something that you talk to your clients about as well?
No, it is not in terms of sale, but I think how we should look at this deal is from a perspective of investment in the healthcare sector in India. The kind of growth that the healthcare sector or the hospitals specifically have given in the entire space have been humongous, right? We have seen the same is reflected even in the valuation. If you will see, the market cap have also grown in the similar direction over last 1 year. Post-pandemic, we thought that this will normalize, but however, the volume growth has continued in the similar trajectory, which indicates that our need of healthcare systems, specifically when we look at our coverage like Medanta, where we have seen a recent listing, right? We have seen these performance coming from these hospitals have been very sturdy, and volume growth as well as earnings performance, as well as this is driving the interest of all the private players also, because they see the growth potential of the sector yet to reach its peak, and there is a lot room to grow and develop the sector as we go ahead, with healthcare becoming more and more customized and specific to individual needs. So this is a very growing area, and it will kind of enable a lot of growth coming in the sector going ahead. So that's the thought I think we have to dwell on and carry forward with. That's how we should look at it.
Leave us with specifics, Cinderella. Which is the stock that you like the most in the space that you cover? Where do you think is the maximum upside?
So at this point in time, as you're aware, we cover Medanta and Aster from our coverage, and both are on buy call from our side. We are looking at it from an individual perspective, but on an entire hospital sector, I remain positive, and we are looking forward to it that we will increase our coverage also on this. On the pharma sector, we like Sun Pharma and Dr. Reddy's. On the diagnostic side, we like Dr. Lal and Metro and Vijaya. So these are the names that we are looking at. Even on the domestic side, we like IPCA. These are the names that we have been looking in terms of investment and upside perspective, which remain at this point in time very attractive, given that the entire valuation in the healthcare space has been looking on the upward trajectory, and we see that the earnings trajectory also will follow in the similar direction going ahead. So that's our take on the entire sector.
Okay, all right, Cinderella, we're going to let you go on that note. Thanks very much for joining in and talking to us. Well, for Max for today, in fact, there is a positive note by Motilal Oswal, which is helping in terms of sentiment as well, where they've initiated coverage on that particular counter. So there's an additional piece of news on Max. Time for a break now. On the other side, Manisha Gupta will join in with Peter McGuire of XM Australia. Stay tuned.
Welcome back, and joining us on the show now is Peter McGuire, CEO at XM Australia, and he joins us right here in our CNBC Mumbai studios. Peter, good to have you in Mumbai. And how long was it the last time you came here?
Well, good afternoon, Manisha. About 4 years ago, so it's lovely to see you again and great to be back in Mumbai.
Well, thank you so much for joining us here in the studios. And let's talk about the crude oil prices, because 3 straight weeks of gains, and this week as well has started on a positive note. We're trading 81 and 85 respectively. Saudi Arabia has increased prices for its Asian and US consumers, and we're still reacting to OPEC and allies cutting output. What are you making sense of all of these statements?
Well, I think the last couple of weeks have been really dynamic for oil traders, and we've only seen, an uptick, and it was a considerable one this time last week, or, 8 days ago. So I think that momentum will build. I wouldn't be surprised to take a little bit higher out than this coming week. Prices are, I think, at a range bound, and they'll stay in that sort of, 75 to 85 in the short run. But I'm expecting probably, as the quarter wears on, Manisha, probably up from here.
Are you looking at 90, 95 in this quarter, or do you think that would be...
It may well happen. I mean, I'm worried about a couple of things. I'm certainly concerned as far as geopolitically what's going on with China and Taiwan. That's a sleeping giant, and I'm just seeing how that all unravels. The Russia situation, I'm conscious as far as Saudis, and overall demand is relatively strong. I mean, some people are saying we're going to see a pullback, but after I drive through Mumbai and I see the engagement across India, you've got to be kidding me as far as, downturns. It's only one-way traffic, and that's up from here.
Well, absolutely. How are you also looking at the gas prices? Because we've come down all the way from $10 to below $2.
Yeah.
Is it oversold? Are you buying at these levels?
Well, I think it's been a dynamic trade to go short on, and we've been exciting. Traders have just rubbed their hands with glee. It's been incredible, and that short side. So I wouldn't be surprised. It's probably oversold. You might see a bounce. Not unusual at this time of year, leading into that summer season in the US. We're only a month away from the start of really summer driving season and weather outages. So I wouldn't be surprised to see nat gas hit up a little bit further from here. But yeah, it's cheap, and that's the time to buy it.
But the story of the year until 2023 clearly has been gold. I mean, we've seen all-time high in India, all-time highs in Australia too.
Yeah, you bet. Central bank buying has just been it's just been incredible over the last year, and I think that will only continue leading forward. So, yeah, gold has been a safe haven, and really a trade that's most retail sector is really piling into physical, and of course silver. So yeah, really important to have a component of that in your portfolio, Manisha. And from here, I won't be surprised to take all-time highs out sometime this year. I don't know what that number's going to be, but I think it'll be upward from here.
Ditto with silver. Are you looking at 28-30 kind of levels coming back?
Yeah, I think so. It's far cheaper, really, from a long-term perspective in that gold-silver ratio. So I think there's more upside in the short run for silver. It's been dynamic in the last couple of weeks, and the fun time will hit us hard as far as upside. And there we are, 24.80. I think there's plenty of upside there for silver.
Yeah, and you've been a very active trader into the forex markets as well, Peter. And what does the dollar index tell you right now? And the market's now looking at euro, Chinese yuan, the BRICS countries coming up with their own currencies. I mean, there's just so much debate happening across board.
Well, exactly. You know, we're one of the largest FX traders in the world, XM, and that's globally. So our retail market is very conscious as far as US dollar and US dollar index. It's come under a bit of pressure there, and it's probably going to take a 102 handle out to the downside. So yeah, I'm interested to see what Jay Powell's thoughts are, rhetoric coming from the Fed and inflation numbers. There's a lot of data coming out this week and certainly this month. So hold on to your hat, softer from here possibly for US dollar, and that's going to be a push-up for a lot of those other commodities.
What would you say is the top trading currency strategy right now?
Well, it's been, have to say, probably euro to some extent. Euro's been really exciting. And but don't take your eyes off the yen because it's been wild and whipsawing, and that's been opportunity really since October last year when it was at 150, traded down to 128. Now it's that mid 130 sort of handle. I think there's plenty of exciting market movement in that yen.
One sector, Peter, which hasn't done well as we've started a new quarter has been the metals as a space.
Yeah.
Iron ore, steel trading at multi-month lows. If
languishing.
You keep languishing, and if you keep copper out of the whole calculation, almost everything is in the negative.
Yeah, you know, tin, aluminium. I thought they were going to bounce nicely at the start of the year, and they had a nice uptick in January. But since then, all the hot steam's come out of it, and so where we run from here, Manisha, may be a point of consolidation. Let's see what's going on as far as demand picture moving forward. But there's been an underinvestment across most of those commodities for probably the best part of a decade. So when they shine and when it's boom time, they'll really come to the fore. And this super cycle is certainly a long way from over.
All right. Any topic that you have in the space? Almost everybody seems to be talking about copper, even at these levels.
Yeah, 8,800. I think it's cheap. So I think there's probably upside for copper. Yeah, just keep an eye on that. It's a wonderful barometer for economic growth, and we follow it closely.
All right. So euro yen is something to keep an eye on, and take a look at gold and silver. Big buying opportunities onto that one as well. Peter, as always, thank you so much for joining us. Thank you for all of that opinion and as well, and amazing having you in the studios.
Oh, it's wonderful to see you, Manisha. Thank you.
Ekta, over to you.
Thanks, Manisha, for that. Well, that is a conversation on the commodity space. Just want to point out Tata Motors. That one is now zooming away. It's your top gainer on the Nifty, almost close to 6% in terms of gains at this point in time. And remember, it's a good outperformer on a year-to-date basis. In fact, it is the top gainer on the Nifty this year with a gain of around 20-odd%. ITC, not doing too badly in today's trading session, is the second top gainer on a year-to-date basis, is up around 0.5% at this point in time. Well, some news with regards to United Spirits, where government sources have indicated they've denied the UK media reports of India and UK trade talks being suspended. So you can see a bit of an up move or a move which is coming in on stocks such as United Spirits at this point in time. Well, on that note, we need to wrap up on halftime reports. Stay tuned. Business Lunch up next.